Hi there. I wanted to talk today about 3 keys for the investors. See, the thing is, they have their tolerance level, their risk level, their tolerance level, and their experiences. It's so important for us to understand what that means. See, the investors would like to invest with you. First of all, their experiences give them the behavior of asking questions. And if they have lost money, or if they have been really, taken for a ride or Ponzi scheme like that, it's very, very hard to break that barrier. Very barrier. I've been able to do it, but it has taken few meetings, not just 1 or 2 or 3 meetings. But that's how it is. Their risk tolerance is so important because you want to see how much liquidity they have, how much money they have, because in the PPM, in the private placement memorandum, it says that you could lose 100% of your investment, and you cannot hide it. You cannot say to them, oh no, I guarantee you this and I guarantee you that and your money is going to be worth this much and all that. No. You cannot say that. SEC rules are very, very strict that we have to be totally factual, and we have to have the fiduciary responsibility towards the investors to protect their money better than even our money. Protect their money better than our money. So remember that their risk tolerance is huge. And not only that, we want to also talk about, their experiences, and then also, their resources, who they are talking to. I'm just looking at my notes. I'm sorry. But anyway, let's have fun, right? I know I was looking at my picture also before this one. Sorry about that. Now I'm looking at you right now. But life is to have fun, isn't it, right? We should be really living a full life. Actually, I'm so excited. I came to this country with $7 in my pocket, and I just felt like in this land of opportunity. I'm from India, as you can tell, and I said, let's just make it big in this country. And then that's how I got to be a promotional consultant and a motivation speaker. And I've given over 10,000 speeches and crushed it in the syndication world. Or buying over $250 million with a B, of real estate. And then we are doing a $50 million fund now where investors are coming in, and we're going to buy another $250 million with that one. That'll be like about $500 million of commercial real estate in my companies. But let's talk about it. So it's so important that, we think about our investors, what their past experiences have been, what's their risk tolerance is, and what their resources are. That is so important too, because who they are talking to, their pastor, their friends, their CPAs, their attorneys. That's why when we put a package together, PPM and all the docs, I task these investors to show it to everybody. Everybody. Their pastors, attorneys, syndicate, their friends, their relatives, everybody, because they need to decide when they want to invest with us or not. And it has to be a good decision from their perspective, not from our perspective. The other thing is the 10% rule. I could really talk about that because, see, not everybody should invest every dime they got. I like to persuade my investors and tell them, don't put all the money in the investment. That is the right way to tell them, because they can come back at you and say, oh, I want my money back because I'm in a bind and you didn't tell me and this and that. So please look at their liquidity, how much money in their 401k or IRA or self-directed IRA, like I'll be teaching. All those things are very, very important. But liquidity is very important because they need to be investing only a portion of what they have saved. Because if the real estate goes bad, this deal goes bad, and they lose all that money, which is written all over in the PPM, private placement memorandum. So you want to make sure you explain that. And then the key thing is, again, think about, as if you are in their shoes. Would you invest that 50 or 100,000 if you had only 100,000 to your name, or 200 even? So that's the main concept you want to understand, and you want to really portray that in your talking to investors.